Hello everyone. Basically a big nothing burger in terms of FOMC today. We're going to take a look at the overall market. We saw how the IWM was the biggest loser today. So we're going to take a look at the SP500, the NASDAQ, the dollar, the bonds, the yields. And of course, you know, all eyes are going to be on Nvidia earnings later on today. All right. So without further ado, let's get started with the video. So number one, this is an hourly chart of the IWM. And I was explaining how going short over here, basically, this was my thought process. We had a falling wedge pattern. So falling wedges are extremely bullish, right? And as you know, the first instance of a bullish move, you don't go short that. But once we have another leg up, it becomes a much safer opportunity to go short. So I was saying that this would be a good opportunity to go short right up here, especially closer to this 180 area. Prior level of resistance, obviously, and we consolidated, and the IWM ended up being the biggest loser. All right, so to continue off of this, we could go ahead and take a look at the IWM on a daily chart, and you could clearly see that it didn't have an amazing day. It closed below Friday's low, and if tech gets a lot of love, then money can be drawn out of the IWM and instead be put into tech. But regardless, a nice little pullback area will be this 175.50 area, which is the trend line. So based off of this pullback, then we're gonna have to see if we bounce. So that is what I'm looking at on the IWM. The dollar has an inverse relationship to the market. If the dollar is green, then generally the market should be red. So today, obviously, we made another low, but we ended up closing green. So now tomorrow, most likely, we're also going to have a bit of a green day on the dollar. So then it's just a matter of seeing how strong of a move we have to the upside and whether that strength in the dollar permeates into the market. So I'm expecting another green move out of the dollar tomorrow, especially after a big drop like this. A nice little bounce to prior level of resistance here is on the table, in my opinion, on the dollar. And if this happens, then it should be bearish for the market. The VIX also has an inverse relationship to the market. If the VIX is falling, then that's generally good for the market. But as you can see, the VIX today was very, very flat. They're trying to control this volatility on the market purposefully, because they don't want any huge swings in volatility. But regardless, in my opinion, if we get a solid red day on the VIX, that would be a good opportunity to go long on the VIX, especially if we come back and retest these trend lines here. But more specifically, if we come back close to the $12 level. But yeah, let's just see what ends up happening on the VIX. So far, there's not really much that occurred today. Next is a chart of the 10-year yields. The yields have an inverse relationship to the market as well. If the yields are doing well, then that is generally bearish for the market. We have to see if that relationship continues to hold true, because at the moment, this is a very bullish pattern on the yields. This is a falling wedge, and we're also at the lower end of this channel, and falling wedges are extremely bullish patterns. We should get a bounce. Let's see if this trend line can hold. If this holds, then most likely we're going to get a nice solid bounce to the upside, which should be bearish for the market as a whole. So here's a chart of the SPY, and we are getting close to a major trend line level of resistance. This was a downtrend created from January, and then we connected it over here to the highs of July. So now you can see that we're getting very close to that level, and that level is essentially going to be for tomorrow. It's going to be around 456, and essentially, this would be this is a target that a lot of order flow is also at this level as well. So let's see if that ends up happening, but we're getting close to levels of resistance. And the other major thing that I want to take a look at on the SPY is right here on the MACD. We could see that the slow MACD line, which is orange, is very, very historically high at the moment on the daily chart. So what I wanted to do was I wanted to see every time the orange MACD line gets to this level, what ends up happening in the price action. So to do that, basically, I just went and scrolled back And you could see that one instance where this occurred, where right here, where the orange MACD line came to this level, we were here for a very long time, right? We ended up blowing past up into another high, right? So we were consolidating here. We ended up making another high here. And then that ended up causing us to really fall much lower. But this entire instance here basically took an entire month from the inception of us touching it to the us retesting that same price. Okay, so it's not an automatic reason to go short immediately, but things are starting to get extended according to this MACD. The other time that this occurred was back in April of 2022. You could see that we came back and tested this same 462 level, and we failed, and we ended up falling much lower here. The other time, but not as closely touched, was back here in November of 2021, where we ended up getting pretty close to touching this level. And right here, right? And what ended up happening was, yes, we got a bit of a pullback from 470 down to 462. And then we ended up bouncing and ended up making another low, breaking below 450. So this ended up taking a month as well. So, but then this month we ended up, making newer lows. Back here, back in August of 2022, it took us a month from the pop upwards to retrace back down to where we popped upwards. So in general, this MACD is very overextended, and that is not something to take lightly. And that's another reason why it's really difficult to start leaning short, start leaning long. So, I would just be very careful about this. And now, of course, this is my thought process on the market so far. But now, of course, everything is really just pointed at Nvidia and Nvidia earnings. I wouldn't be surprised to see if Nvidia even comes out flat, to be honest. But we'll see how that plays out. All right. So I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff. And I will see you guys bright and early tomorrow morning. Thank you.